Welcome to the Dollars and Cents podcast with Wes the Economist and Jonathan the Conspiracy Theorist. We're reporting to you live from the Wave Beach Realty Studios in North Myrtle Beach, South Carolina. Give us a call today at 843-957-3872. All right, guys, welcome back into season, I don't know what season we're on, but it's
season
episode
3.
4. Season 3, episode 4 of
the Quick Clips.
Of the Quick Clip series with Wes the Economist. I am Jonathan, the conspiracy theorist, reporting to you live from Longs, South Carolina. I'm not sure. Oh, Wes is in just outside
South Carolina.
Lugolf, South Carolina.
Yep.
The good old big city of Lugolf.
Lugolf, better than Columbia. No offense, Columbia, but I don't want to live in Columbia.
Listen, I'm not going to.
Especially anymore.
Yeah, I'm not going to hate on anywhere else. I don't know who's listening. I'm not going to catch any flack. You can be the one getting the bad
I can
emails.
be the one.
Yeah.
And all the politicians are heading back for their first session at the Capitol, so it's going to be a great few months here.
Oh,
already bickering, already thing, but we're staying away from politics as much as we can. But we were just doing prep, and literally all three of our topics, one of them is going to be a political segment, but the other two are not supposed to be political segments, but they end up being political because the government is so involved in our economy. It's just ridiculous. But I did hear Trump talk about wanting to do 50-year mortgage rates, and my skin crawled when I heard it. What do you think about it?
So if you don't know, all right. So the first thing I'm going to say is most people don't keep a home for 20 or 30 years. Most people don't. So it doesn't really matter the term of the mortgage. You're going to pay front-loaded interest. You should always make extra principal payments. And the negative of a 50-year mortgage is obviously the payments are going to be spread out over 50 years, so your monthly payment's cheaper, making it easier to get into the home, but you're going to have more interest over that term. You're going to pay, whereas on a 30-year, you might pay double for the price of the home. You might pay close to triple for the price of that home if you make all 50 year payments the same payment.
I saw one calculation that said it was almost 4 times the price.
That's probably about right. I haven't done the math on it, but I know it's at least 3. Yeah. So I think people just need to be educated on what a 50-year mortgage means, because if 30-year mortgages weren't a thing and there were only 10-year mortgages, if somebody pitched the idea of 30 years, people would be just as frantic about 30-year mortgages. So it's all about education, in my opinion. I think 50-year mortgages are a great thing because most people are not going to keep the same home for 50 years. And if you just educate yourself on making extra principal payments and do the math and see how making extra payments here and there can take so much off of the loan and so much interest off to build equity in the property, you'll be much better off. So I think anybody that does a 50-year mortgage, maybe for the first 5 or 6 years, maybe we make them go through some type of little educational course, like an online course they have to take or something that, is a few hours that just explains the financials and the ins and outs of a 50-year mortgage and making principal payments and principal versus interest and the pros and cons of what they're signing up for. So I think with the right education, a 50-year mortgage gets more people in home, because I'd rather have a 50-year mortgage with a lower payment than be paying somebody paying rent and paying somebody else's mortgage down. You're still going to come out better with that than renting. So I know why people are saying, oh man, 50-year mortgages, you'll never own your home. Well, that's not true unless you just want to make the exact minimum payment every month. So it comes back to affordability. One, even with a 50-year loan, make sure you get a home that you can easily afford. So anytime you have a little extra money, you can put it aside, pay it towards the principal, and knock that. You could turn a 50-year mortgage into a 30-year mortgage if you're smart with your money. So if you do the right things, there's people out there that they're going to get foreclosed on, whether you do a 50-year mortgage, a 10-year mortgage. That's just going to happen, unfortunately. But if you at least give people the education to make good financial choices with that 50-year mortgage in place, I don't think it's going to be as bad as when you just hear 50-year mortgage. The sticker shock of it is not going to be as bad as what it sounds.
Right. The side of me, no, I'm not sold on it, just simply because the key is education. I mean, right now, just credit cards. I mean, he's talking about doing 10% on the credit cards, which I don't think he has the legal right to do, and it's probably not going to happen. He's probably just posturing again as normal. But somebody on the Clay and Buck show was pointing out if you did 10% on credit cards, then people would just run up a bigger debt, and 1 year from now they'd be paying 20-30% on a bigger balance. So that's what I worry about 50-year loan. Can we actually get these people educated? which goes back to my profession and how we're not educating people even in college. And we need to be teaching consumer math again in the high schools, which we don't have time because everything else would junk we're teaching.
Right.
But
No,
so
I agree.
that's what I worry about is you end up with that many more people not understanding that they're paying interest only for the first 15 years and the balance is not going to go down basically for those 15 years. And so are they really going to be better off at the end of that 15 years? But you make a good point. I mean, it's better than renting from somebody. I mean, that's the reason I bought when I did. I was planning on, trying to get by without buying as long as possible, but why pay somebody else's mortgage? So good point. Good
Right.
points on both sides. I haven't seen anything about it lately though, so I think it's kind of died, hasn't it? Or is it still out there kind of floating around? Eisenhower Dental, located at 107 Waccamaw Medical Park Drive in Conway, a place where you can find all your dental services, including general dentistry, cosmetic, restorative, and pediatric dentistry. Reach out to them today at their website, eisenhowerdental.com, or call them at 843 234 3110. 843 234 3110 and tell them Wes the Economist sent you.
When life gets unpredictable, turn to a partner you can trust. At Bobby Clary State Farm, we've got you covered. Whether it's home, auto, or life insurance, we're dedicated to providing personalized coverage that fits your needs. With our friendly and knowledgeable team, navigating your insurance options have never been easier. Visit bobbyclary.com or call 843-438-6000. Bobby Clary State Farm, here to help life go right.
I've seen more articles that he's still working on getting all that passed. I think like I saw something, it was either last week or the week before, where they were having a big meeting with like all there was people like in the mortgage industry and stuff. Trump was having a big meeting at the White House with a group of people to try to actually work on these things. So I think it is in the workings, and I think the 50-year mortgage thing will get passed. Now the other thing they're trying to do with the banning corporations from buying up real estate. I don't know how far they'll get with that because they're taking a lot of money out of a lot of billionaires' hands that way. I don't know. Are we going to force them to sell everything they own? I don't know. I don't know that he'll get far with that. I think the 50-year mortgage thing's doable. I don't think banning corporations from owning. I don't know the legalities of telling a corporation you can't own real estate. I
Well,
don't know.
it's kind of up in the air, but they come back to the free market on all this. I mean, for one thing, why are we telling banks they can or cannot make 50-year mortgages? If the bank wants to make a 50-year mortgage, to me, they can make a 50-year mortgage. All these rules and regulations that comes to this with the investment. Um, are we really the ones from the government to say that, hey, you can't buy this, you can't do that? Now, I do think I wouldn't be opposed to there being something to level the field. I mean, these corporations are coming in and buying. The corporations are buying houses. What do they need a house for? It clearly is an investment. So there needs to be something that kind of I don't know how to put it. Basically, they need to be taking the same risk as individuals are when they buy that house. And let's face it, they're not. They're hedging their risks with all their investments.
Yeah. What I think might actually be a good idea, and this is already I've seen this with when on foreclosures that I've done deals on in the past, when Fannie Mae actually forecloses on a property
Hmm.
and puts it on the market, they actually have something called the first look process. And for the first 2 weeks that the property is on the market, only people who will occupy the property as a primary residence can make offers on the property. After that, then it opens, like even if I wanted to flip it, I
Right.
can't make an offer on it for the first 2 weeks. So they'll look at offers for the first 2 weeks. If nothing comes in or nothing that they accept comes in, then they move on to okay, investors and whoever flippers, whoever can make offers now. And I think that if they did that, like on a scale with all homes, like, okay, if you list your home for the first 30 to 45 days it's on market, a company like BlackRock or, whoever
Right.
can't come in, these big companies and buy it. But after it sits on the market for X amount of time and no, you've given buyers the chance to buy it at reasonable market value, then you can sell it to whoever. And then maybe it gives people a chance to buy before things get, because I don't, in my market, I don't see them buying up properties in
Right.
Myrtle
Right.
Beach.
Yeah.
I don't see that. So I don't know. I'm assuming it's California, New York, Texas, places like that. big markets, big city markets where they're probably getting a lot of equity over a shorter period of time and getting top rent because I know they're renting these properties out. So
Right.
it doesn't affect my market directly as of right now. I'm sure that could change at any time. But I think if we offered some type of first look process like Fannie Mae does now, maybe that would help a little bit with that if they don't aren't able to pass the law to just completely ban it altogether, which I don't think they'll be able to do.
Now, I don't, I don't think they will. And I don't think they should. But I do, like I said, I do think that there needs to be some kind of level field. And right now, these big corporations are definitely pricing individuals out.
Yeah,
So,
yeah, and like I said, I'm not seeing it, but I'm hearing about it, so I know it's happening somewhere. And I think some type of process where there's X amount of days before a company like that can come in and do it, make an offer. It gives anybody. So you got 45 days. If no individual has come through and made an offer in 45 days, well, all right, well now the house is fair game. You've given people ample
yeah,
time to
yeah.
see it on the market, come look
So,
at it, make an offer, try to negotiate a deal. In theory, those big corporations are typically going to try to get the home at a discounted price less than what an individual would pay anyway. So if you give that 45 days, the chances are that that homeowner is going to get the best offer in the 45 days than they would get from the corporation after the 45 days. So I think something like that would be the best way to handle it. So there's just like a no buy window for corporations.
mhm. Sounds good to me. If something, I want to see something done. So that sounds as good as anything to get some people back in houses.
Yeah. Yeah, I think it'll
Um,
help. And,
Speaking of which, how are things going? How I haven't even seen the latest mortgage rates or what's going on in the market right now.
yeah, so come on, buddy. So he wants to be on air too. My legato wants to be on air. So the mortgage rates have gone down actually quite a bit in the past couple of weeks. They've been a lot of people are floating their interest rates right now that are buying homes because
Hmm.
when you lock your interest rate, obviously you're locked in. But when you float the rate,
Right.
as the rate fluctuates, you can just lock it in at any time before the closing. So I've heard a lot of people locking in and and floating the rate and getting high fives right now on a primary, without having to buy the rate down. They're getting, 5.9s, 5.8s. I even had a guy who went through a local bank who had a good working relationship with them, and he was buying a pretty nice house, and he got locked in at 5%. Now
Wow.
that's
Really?
more of having a relationship with a local bank
Right.
and them kind
Right.
of doing
Right.
you a little bit of a favor, but it's doable. We're seeing the fives again, which I said probably a year ago that if we just got down to 5.5, that would be about as good as I'd expect, and I wouldn't be complaining. I don't think we're going to get into the fours. Some people say we will. If we do, that's fine. I just once you start getting into the twos and threes, I don't think that's even necessary. I think they did that, after COVID to kind of stimulate the market, but it had a negative effect in the long run. That's why we're at where we're at right
Oh
now
yeah.
with all the
And
inventory.
you look back even through the teens, interest rate was way too low. I mean, because
Yeah,
the federal funds rate, which is the base for all interest rates, was pretty much zero.
yeah.
I mean, the Fed really screwed us for a long time.
Yeah, yeah. So I think 4.5, 5.5, somewhere in there. If we stay in that ballpark, we'll be all right. I don't think we'll go into the fours. I really think about five is about the lowest you're going to see right now, unless you buy your rate down a little bit or something. But
Right.
I think that's about where it's going to be. But right now they're sitting in the high fives, 5.8, 5.9. I'm sorry. Yeah, yeah, 5.8, 5.9. But you might see them get down. I would say 5.5 is about what I expect. But if they got down to five, I wouldn't be shocked. But anything under that, I would be. But
Yeah.
it's good. It's stimulating the economy a little bit. I'm already starting to see buyers come out a little bit. So it's good. It's stimulating the buyer activity. People have a little more confidence in the market. And on top of it, housing prices are kind of stagnant. They're not going up right now. If anything, they're dropping a little bit here
Are
and
they
there.
dropping a little bit?
Yeah, so it's making it a little more affordable right now between the interest rates and prices also dipping a little bit. So I think I'm seeing right now, I'm really optimistic for 2026. Anything can happen. We could be in World War III tomorrow and nobody wants to buy anything. But as what I've been seeing the past couple of weeks, I'm starting to have a little bit of optimism, and I'm gonna cross my fingers and keep being optimistic that we continue to go the right way there.
Well, I was just talking to another economist, and we're going to talk about this on one of our next quick clips. CPI was down this still down below 3% for the last month. They're expecting GDP to be up over 5%, 5% or above. So we're seeing this growth. Honestly, This is why economists do not try to forecast. I'm surprised. Again, Trump has surprised me what he's squeezed out of this economy, and not just I say him. He hadn't done it personally, obviously, but he's made the environment in a sense that the economy is growing. When the economy grows, then you have prices coming down or prices staying steady, and that's what we're seeing. So, like I said, we'll get into that in another clip. So, for the housing market for this year, it should be a good year, unless something else comes along to stop it.
Right. Well, and there's always that what if. So I know, I'm always cautiously optimistic at all times. I'm very optimistic, but I'm also a very cautious person, so I never assume everything's just going to be great, especially the way it's been things have been going the past 4 or 8 years. So
Tell me about it.
yeah. But yeah, so long story short, 50-year mortgages, in my opinion, aren't a bad thing. Wes has his own opinions.
Oh, yeah. Always
Given
do, right?
buyers, we're both for keeping corporations, not necessarily banning it, but giving buyers a first opportunity to buy properties before the corporations come in and snag up everything.
Yep.
And we're both cautiously optimistic about the 2026 economy.
I'm very cautious because there's still so many other factors that I'm worried about. And I won't pull up the debt, give you nightmares, but it has slowed down. Trump has slowed that Tuesday. Clock
Let's
down.
Wait till Friday.
Trump has slowed the interest down. That clock ain't not going up as quickly, but it's still going up. So I actually introduced that to my first class of the semester yesterday, and you should see the students' eyes when they look at that number and start to realize exactly what a trillion is. It's kind of scary. So, I guess on next clip we get into some of this econ stuff if you want to.
Let's do it. That's your bread and butter. Let's do it.
Anything else on the mortgage side, housing side you want to get in?
No, I just, if you're moving to the Myrtle Beach area, give me a call. If you have questions about 50-year mortgages, drop us a message, get us an email. I know I had to plug myself.
You got to plug yourself.
I know you're going to plug yourself. Wes is going to plug a book on the next episode. Don't let him laugh. So anyway, yeah, call me at Wave Beach Realty. But if you have questions just about 50-year mortgages, pros, cons, and just want to talk about that, I can walk you through all that in my personal opinions. So yeah, I think the real estate market is going to be good in 2026. Don't be scared to stop renting and make a purchase. And we'll catch you guys on the economics episode. Maybe we can tie the two together, and you guys can learn something.
Oh,
today.
definitely can pull them together. And I was going to give the email address they could send it to, and we hadn't used the email address in so long. I can't remember what it is. Do you remember it?
$centsgs@gmail.com.
Okay, so the and's not in there. So it's $centsgs@gmail.com. You're positive about that?
No.
Well, I'm looking at
it. But
Steve, you're right.
The key is to sound positive when you say it, and everybody will believe it.
$centsgs@gmail.com. You were right. All right, we'll catch you on the next one.
See you guys.
Mortgage payment, insurance payments, credit card payments, they can be very overwhelming. Are you ready to take the time to get things under control? Then reach out to me at Clark Financial Coaching to see if we can get you started with a budget and then a vision for the future. Write me at coachwestc@gmail.com. That's coachwestc@gmail.com.
Are you looking to buy a home in North or South Carolina? You need to reach out to Wave Beach Realty today. We are a family-owned company with over 10 years of experience in North and South Carolina and operate along the Grand Strand. Give us a call today at 843-957-3872. That's 843-957-3872. Thanks for listening to the Dollars and Cents Podcast with Jonathan the Conspiracy Theorist and Wes the Economist. Don't forget to follow us on Instagram and X at DollarsCentsGS and on Facebook at Dollars and Cents.